Now, this year 2022 was supposed to be an year of recovery. So it was believed that after 2 years of horrible pandemic, 2022 will help us recover or come out more victorious across all different sectors. It has not been the story which we have expected. Markets have been down, inflation has been high. Most of the economies in the world have been in vulnerable situation. Some of the countries which have never defaulted in last, I would say 50 years, have defaulted on their obligations, and so on and so forth. So moreover, largely this year has brought in losses over losses. Whether it is institutional investors or retail investors, everybody has seen bloodbath across both equity and crypto markets. Now, the one thing which has disturbed me a lot are these videos on YouTube where some of these big influencers like Kevin O'Leary, Mark Cuban, they have been still trying to show that it is all positive in crypto markets and they have been investing, and very well they might have been. But I wanted to make sure I make a really quick video to warn people that, maybe this is time for you to pull back from crypto markets in general. So enough talking, let's try to understand what is going on in crypto markets. You see, since start of the year, crypto has lost more than $2 trillion in market cap. As of making of this video, the market capitalization stood to somewhere around $880 billion. And that is a huge amount of profit sharing since the high peak which it gained during the pandemic. Moreover, Bitcoin, which at one point was $1.2 trillion in 2021 and started with like $900 billion at the start of the year, currently stands at somewhere around $300 billion, which means it has also lost almost $600 billion in market capitalization. And this is the same story across the board for all kinds of cryptocurrencies, including Ethereum. In fact, after introduction of Ethereum 2.0, which was considered to be much more helpful in building up much more utility for Ethereum, it has only seen downward turn. You see, the bigger problem is that this whole concept of cryptocurrencies or decentralized finance, which was supposed to revamp and reinvigorate financial inclusion, has kind of failed in many ways. There are more than 19,000 coins, out of which many of those schemes and protocols which are out there promise you exorbitant amount of returns, which are unsustainable, and cannot be a way to create value out of thin air. Whether it has been crashing of Terra and Luna or Celsius or hack on Polygon, all these different kind of incidents which have happened throughout last 7-8 months have only instilled fear amongst normal investors. And on top of this, all the institutional investors who pumped up the free money which was flowing throughout the pandemic into cryptocurrencies and inflated the market at large. You see, any commodity out there which builds up value is because of two important reasons. One is utility and second one is demand. In fact, they both are very much correlated. When there is higher utility, there will be higher demand, and thus the price will go up. When you look at crypto markets in general, in fact, when you look at all these different cryptocurrencies out there, whether it is Bitcoin, Ethereum, Ravencoin, Litecoin, so many other coins, Dogecoin, none of these have been able to satisfy anything in terms of their utility. Bitcoin is a very expensive commodity. It can be considered largely as a store of value, but when it comes to utility, it cannot be used for payments because it's very expensive to transact on Bitcoin network. The cost of settlements, the cost of transaction is very high. The same goes with Ethereum. Once touted to decentralize everything with the introduction of smart contracts and everything, it also turned out to be really slow. And when it comes to larger transaction per second or transaction volumes, Ethereum network cannot handle that too. The biggest challenge around all these had been reliability and trustworthiness of the network. This is not new. Since the introduction, there had been cases over cases of people pumping and dumping whole bunch of different coin schemes. So all in all, utility had been a bigger problem for the entire crypto marketplace. While there were certain promising aspects like NFTs, which could have been used to revolutionize or change how people bought and sold artwork, it has also been plagued with a number of fake scams out there. You You see, because of inflation and because of a huge amount of profit recovery going on, largely when you see both equity and crypto markets have been under huge pressure. There have been so much of selling where people have been trying to gain or recoup their losses from one market in the other. And that has caused a lot of correlation across both equity and crypto markets. This means that the whole hypothesis that the Bitcoin or crypto market is not correlated with equity or normal equity markets have been debunked, which means that whatever happens, all these things are correlated. What it means is that the whole concept that cryptocurrencies will help you decentralize and reduce your dependency on established financial ecosystem kind of stands exposed. If you are going to face the same headwinds which you have been facing in equity markets, in the crypto markets, and that strong correlation is established, then obviously you are going to be governed by the same forces which govern normal markets. And those could be inflation, decisions taken by governments across the world, the policy changes, monetary policy, fiscal policy. All these are still going to impact your crypto markets. In this kind of a market, it is better not to go into crypto markets because anyways, most of the stuff which is there out there in crypto market is based on speculation. The volatility is much higher because the markets are 24/7 open, and a decision on another side of the world could impact all your savings while you were fast asleep in your bed. Recession is in some ways good because it helps you get back into the markets. The bad thing about recession is that it wipes out wealth as well. Now, investing into highly speculative markets such as crypto market could mean that there is huge amount of unpredictability as to where your investments may grow. One important thing to understand or differentiate between equity markets and crypto markets is that all these stocks which you invest in, whether it is Apple, Google, Facebook, Netflix, they all have a little bit of a predictability around them. Now, when I say predictability, it means that when you look at the company's policies, when you look at their strategy, when you look at their projections, you would get to know that where are the investments being made? How are they going to recover? What are their strategies in terms of the competitive pressure around them? Whereas on this side, it is simply based on the trends which you see in the market. When people start investing, you start investing. When people start selling, you start selling. And in my opinion, that is not the best way to react when the market is subjected to a huge amount of recession. The world is kind of going through a huge amount of transition or transformation since the pandemic. Now, when I say that, what I mean is that all these companies which have been pursuing growth or transformation are going to simply accelerate because they might pull back on their investments during this recessionary period, which means the years 2024 onwards, there could be a huge spurt of growth and expenditure which these companies may make once the market starts recovering. Let me explain this by taking Facebook's example. Of course, Facebook has seen decline in value since the start of the year, but they are not pulling themselves back in terms of the investments they are making, the bets they are taking. And the investments are not going all around trying to shape up or defeat competition. The investments are being made to build up assets. Like, for example, the investments in Metaverse, investment in building Horizon platform, investment in building, creator payouts, or investments in Quest as a hardware platform are all going to pay off. Of course, there's an adoption cycle. Of course, there will be certain amount of investments need to be made so that these technologies get refined. But what it shows is that Facebook as a company is a highly valuable asset to have because the growth in the future is going to be tremendous across some of the returns which are going to come across some of these investments being made today. Finally, just to conclude, I want to stress on this fact that don't get swayed by these influencers or these big shots who are investing in crypto or in Bitcoin and others are buying at the dip because probably they have enough money to park in some of these instruments. But as a normal small investor like you and me, it's highly risky to invest in something which doesn't have a proper framework, no regulation, nothing to bank upon in terms of asset. And just because everybody is doing it, you just put all the money in it. So stay back. Try to keep money, save money for the rainy day. And most importantly, try to find out these 4 or 5 key companies and stocks in which you can believe in which you could believe in terms of the strategy and invest in them to recoup growth as they grow back. So with that, I want to end the video and want to wish you great health, happiness, and joy. Stay safe, stay happy, and I'll see you in the next one. Bye.